Cannot hear you, Hadia.
Hello, can you hear me, guys?
Yeah.
Yeah.
Okay.
Yeah,
Perfect.
now.
I'm having issues, so I don't know. I've been screaming it's like, everybody, can you hear me? And nobody answered. I'm like, okay, that's not good. So I wanted, where did this come from? I want you guys, I'm gonna make it brief. I'm gonna make it about half an hour, 40 minutes. But if you take your notes, so it will help you how to present FHA versus conventional to your clients, because, and as a realtor, you're going to have a listing, you're going to have to look at offers coming in, and you're going to have to compare why this FHA or this conventional is better, because as a myth, all realtors, they're thinking conventional offer is better than an FHA offer. They're always, I'm getting those calls, is like, can my client go conventional? Because for some reason the realtor wants a conventional loan. So I'm gonna tell you, when do you look at conventional loans more seriously, or you want an offer or with a client on a conventional, as a conventional loan versus FHA, and what's the main things you're gonna have to look at in the house itself, and what is the difference? Okay, guys? Are you all with me?
Yes.
Are you guys with me? Larry, Ali?
Yes.
Okay, perfect.
Can hear you,
I
no
want
problem.
that, because some people, they have actually, I'm having a lot of problems these days, because when I issue my FHA pre-qual, listing agents call me and say, Hadia, again, this go conventional. There is a couple reasons for that, which is the first one, I would say, if it's a flip a property, that means it's been bought, rehabbed, and sold within 90 days. That's one of the major reasons for listing agents to ask for conventional loans, okay? So you need to understand, if the house been purchased and sold by a private owner within 90 days, they cannot go FHA. They have to go conventional. FHA does not allow it. It has to be 91 days for FHA offer to be written and go to escrow after 91 days. So I just wanted to bring in this, but I'm gonna go really quick on the difference. Sometimes we take the FHA, the client FHA, because there's a lot more flexibility, that it's better for them to go FHA. So when we present to them FHA versus conventional, we always see that FHA in some cases better. But that doesn't mean that the client is not qualified if they choose not to go conventional, or they cannot go conventional. So this is a lot happening these days with the listing agents. I ask them two questions. First, is it a flip? And if they say no, it's not a flip. The second question is like the condition of the property. Put these down, guys, so you can talk intelligently to your listing agent. You know what you're talking about, okay? This is the first one. The first slide would be, we are going to discuss the following. I'm going to discuss the down payment difference, credit score, debt to income ratio, mortgage insurance, and property standards and interest rates, and how we kind of judge if the client's going to go FHA or conventional. The conventional, usually we can go as 3% down. FHA, it's as little as 3.5% down. Okay, so there is a problem with this sometimes with the 3% down conventional, they have to be not owned a property for the last 3 years. Okay, they have to go through a certification, first time homeowner certification. And the third thing is they're going to have some reserves and their DTI cannot exceed more than 43%. So there's a lot of restrictions because I have to run them DU or LP at the beginning to make sure, because there's a lot of guidelines and a lot of tight guidelines around the 3% down conventional. Is it available? Yes, it is. Regarding the FHA, it's a 3.5% down, as everybody knows. And if you don't put your notes, I can have a conversation with you. In all, how long I have been in this business, we always did 580 FICO score with a 3.5% down if DU approves the file. In this time, after COVID started and all the craziness, what happened is that many investors, they do not purchase the loan less than 640. Is the 580 still available? Yes. There's a lot of different guidelines right now when we go 580 if they don't have the 640 FICO score. But is it available? Yes, it is. And we usually as a lenders assess the situation based on case by case. If your buyer has 580 less than 640, between 580 and 640, make sure which investor they are working with. There's a little bit higher interest rate. There could be points associated with it, like they have to pay points. So have them discuss with your buyer everything before. We did 500 FICO score with 10% down before. To be honest, I do not push it that much because I don't want to disappoint anyone, and I never disappointed anyone in my life when it comes into lending. So I'm very cautious. As much as I know, I'm literally on those less than 640 FICO score, like I said, case by case, make sure you ask the right questions. DTI, I'm gonna just let you know the difference on the DTI. So you have this buyer is perfect for FHA because we can go up to 57% DTI. On conventional, 3% down, we cannot exceed 43% DTI. In some cases, when we are lucky, might get up to 50% DTI if they have this amazing FICO. You gotta understand, sometimes the guidelines, they tell us, oh, by the way, if you have 660, you can go 3% down, right? But when we run it DU, it does not get it approved. So the DU puts restrictions. They read the income, they read the everything of the loan application, the credit, and they might say, you know what, we don't like the history of this credit. We might not like the reserves of this client. And guess what? We are not, right, gonna accept it. So I just want to let you know there's a lot more flexibility when it comes into FHA, not because the client, even if we can go all the way to 43%, as low as 43% DTI, there could be other restrictions. Like I said, reserves are much required on conventional loans than FHAs, and say, you know. So I just wanted to have this mentality as a realtor, why sometimes the client has to go this product or this product based on the full picture of the client. We have to know, we have to assess, and then make what's the best for the client always. The second one I want to talk, so we talked about down payment and the difference in down payments and the difference in here in the debt to income ratio, right? And the FICO scores. The second one is the debt DTI, so credit scores. And I discussed the debt to income ratio, the difference between both. I'm gonna go to the private mortgage insurance, okay? There's mortgage insurance. I hope everybody understands what mortgage insurance is. Does everybody understand what mortgage insurance is? If you don't, you know.
Yes.
So write it down, guys, and you can ask me. I can take a few minutes one-on-one, and then I'll explain to you what mortgage insurance. Anybody has a question so far?
No.
No.
So mortgage insurance, I'm gonna now compare mortgage insurance.
Hold on,
FHA
sorry, I have a question.
Sure.
Just to be clear, so the credit requirement for FHA is back at 580?
Well, I still have plenty of investors taking 580, and I've been having a lot of clients 580, but when we are discussing the rates 580 versus you know, the rate for 640 plus, some clients is like, okay, I have done them. I did 3 this year or 4, but not much. If they are close to 640, what we've been trying to do is helping them to reach 640 to be able to get the better interest rate and better loan, and better, you know, it puts them in a better position to make that payment. But is there 580 to 640? Yes, there is. Okay.
What would the interest rate be at 580?
580, I priced one, actually it was 591, and it was 3.625, something like that, or 3.75, and they had to pay 2 points in discount points. So when I discuss it with the client, some clients are like, okay, what can I do to move to a better position? So between 620 and 640, it gets a lot better, like 3.625 with no points. Got it?
Mm-hmm.
Did that answer your question, Steve?
Yes.
Yes, thank you.
Okay.
I mean, I don't think that's a bad interest rate for somebody with a 580 score.
Nope, it is not. But you know, it depends which client and area we're working with. I mean, I have been working with many clients in the $700,000 price range, average sales price, and I have done probably 50-50 between Antelope Valley and other areas this year. And the client base in Antelope Valley, when we discuss the rates with them, they are a little scared. They are always coming in with enough money to close the transaction. They don't have the extra. So for them to take that step, sometimes if there's a little work on their credit, I assess everybody's credit below 640. And what I do is give them couple tips, whatever tips I can give them to increase their FICO score so they'll position themselves better to get a better interest rate. Some people, they don't care. Like I had a guy came in 40 points lower than 640. I told him, your wife needs to remove her authorized user from your credit, and it will boost her credit for 10 points. Your in transaction, maybe we can get this done throughout the transaction, and that's what happened. And they ended up getting 2.75 instead of 3.375. So the difference is a huge. So I present it, and it's up to the client to get it done. So when it comes into mortgage insurance, guys, I need you to pay attention on mortgage insurance, because a lot of people, they call me and they ask me like, oh, my client wants to go conventional because they don't want to pay mortgage insurance. So they think because they're going conventional. So I just want you to clarify this, that every conventional loan will have a mortgage insurance, okay, if they don't put the 20% down. So at the 20% down payment, that's when they don't have a mortgage insurance on, okay? So, okay, so basically on that scenario, and the mortgage insurance changes, you guys, for a conventional loan based on, it's driven by 2 things, down payment and FICO score and debt to income ratio. So if I have a client with 10% down, is their mortgage insurance going to be cheaper than somebody with 3% down or 5% down?
Mm-hmm.
if I have a client with 760 FICO score, their mortgage insurance is going to be a lot less than 700 FICO score. If I have a client, they have 45% DTI and lower, different than 45 or so. We can close sometimes transactions at 47% DTI, 48% DTI. It gets higher, the mortgage insurance. So it's not fixed. It depends on those variables. So I want you to know that 20% down, that's when you remove the mortgage insurance. On FHA loan, guys, all loans must have a mortgage insurance. It does not change if you have a client with a 3.5% down and they're all at 0.85% monthly mortgage insurance. This is the rate for the mortgage insurance for FHA loans. For conventional, it goes up and down. Now, if you have a client putting 5% down or more on FHA loan, it goes to 0.80%. So it's 5 bips lower, 0.05%. But I'm just letting you know, you don't have to know all of this, but I'm just letting you know the difference between the mortgage insurance. So if you have a client, 3% down conventional, 3% FHA, most likely the conventional loan with 3% down, their mortgage insurance is gonna be different based on their FICO, based on their down payment, based on the debt to income ratio. Okay, the other one is fixed. We know what is it all the time. The next one, my mouse moves like crazy. Is everybody in a good understanding so far?
Yes.
Anybody has a question? Okay. So loan limits, I wanna compare loan limits between conventional FHA. It's actually, guys, the same. And I'm putting the loan limits for high balance loans, 765, 600 for one family, for single family residence, and 1472, 550 for 4 units. So if you are buying a 4 unit FHA loan or conventional loan, owner occupied, it's the same loan amount, and the down payment for FHA, it stays the same, 3.5% down. On conventional, we don't have 3% down payment on conventional units, owner occupied. If it's 1 unit, it's one thing. If 4 units, it's different. So I just want to give you the difference between both as far as the loan limit. Next one, I'm going to be talking about appraisals, and that's where I wanted guys to focus and asking the right questions to your when you are presenting an offer. And if you are a listing agent, you got to understand if your property is better to go FHA buyer or conventional buyer. As a listing agent, sometimes the listing agents, they're just asking for things, thinking it's better, but that doesn't mean. Actually, I had 3 fallouts with 3 different listing agents, and they came back to me, to my buyer, and I told them, conventional is much more strict guidelines, you guys going after the conventional buyer, but if the property is this, and if it's not a flip, FHA as good as conventional, or much, much better. So knowing that the loan amount is the same, so if you are listing a property up to $765,000, it can go FHA or conventional. It's the same loan amount limits. So what about appraisals? Since COVID, plenty of appraisals have been waived by Fannie Mae and Freddie Mac on case-by-case basis. I'm going to be discussing, like, whenever we get a actually a buyer or a refi business, when we are running them DU or LP, we read it, and sometimes it gives us a waiver on the appraisal, case by case. Like I said, it depends how much equity they have on the property. It depends on how much the client is approved as far as the credit and reserves. So the DU reads everything about the buyer and assess the file, and it might waive the appraisal case by case. Go ahead. Anybody has questions? I love it when nobody has questions. Good. That means everybody's paying attention. Really good to me, huh? Conventional loans are irregular appraiser is requested that property can be investment or primary residence. FHA, there are strict guidelines for appraisals. This is because the property will be the borrower's primary residence. So whenever we are doing FHA loans, VA loans, they are much more strict on what they could want, what they want the property to look like and stuff like that, more than conventional loans. While both loan types will check for hazards, FHA will ensure the property follow HUD guidelines. So basically both appraisers gonna be looked for hazardous repairs. Like if there's wires coming on from the wall, they're both gonna ask for to be fixed. If the fence is you know, falling in the backyard, they're gonna ask. If the water heater is not strapped, they're both is gonna, you know. So there's a lot of things that FHA and conventional appraisers gonna be calling when they inspect the property. But on FHA, I'm gonna tell you a little bit more, but it's not that much different. But Fannie Mae and Freddie make appraisal requirements. I put like little for you guys to understand, because I get calls myself, and I'm sure many of you call your lenders and ask them those questions, or some of you, they go to their coach, they go to their broker. You don't know the difference, what the appraiser might call if they are going FHA or conventional, or sometimes like Hadia, I have this, like, you know, this door does not close, or there's a missing door. What the appraiser would call it or not call it, right? So you don't understand what could be. We call it lenders required repairs. Write it down, guys. Write it down. Lenders required repairs. That means when the appraiser goes out to the property, they might call some repairs, and they call it lenders required repairs. That means it's called by the lender appraiser. Okay, guys, do you understand that? Anybody has a question about that?
This is for FHA,
So,
Hadia, or for both? For conventional and the FHA, only for FHA.
what do you mean by that? I don't understand.
When the requires the repair for the house, this is for the FHA and the conventional the same?
Both. The lenders required repairs, it could be on both loan products. It could be going to FHA or it can be to conventional. So whatever the appraiser is gonna call, it doesn't matter what type of product we are going with. So main purpose for conventional appraisal is to determine the value of the property and its condition. So when the appraiser goes to the property, as a conventional appraiser, they are the first, their priority is to determine if the property value is there and if it's in okay condition, okay? But there's not much difference between appraisals versus conventional loan appraisals. Conventional appraisals normally concentrate on the value and the condition of the property, okay? But in many cases, conventional appraisal will call out hazardous item like I mentioned before. If they see a rail falling, if they see like sometimes there's unfinished deck, okay guys? So they put the post for the patio to be installed, but they didn't finish it. So if somebody tripped and, they could cut themselves, they might ask those to be covered. And, missing oven, it could be easier sometimes on conventional than FHA. So it depends what the house condition is. It determines if the appraiser is going to call things on FHA or conventional. So there's always this thing like conventional appraisals are easier, less guidelines, which is yes. And I'm going to show you what you could be looking at in a house to see if there's going to have a problem if we go FHA. So FHA is more strict on codes and hazardous items. I put for you guys here to pay attention when you are with your buyer looking at the listing. If you're a listing agent, if you're a buyer yourself, I have some of my buyers on the call. So if you look at this, I put them together, okay, which is many of those will be called on conventional as well, but they are much more strict on FHA. Peeling paint, broken windows, unsafe plumbing, HVAC, electrical items, like, if there's electrical items missing, it could be a little bit more strict on FHA versus conventional. But if all the appliances are there, you should not be having a problem. No pending building violations that can affect the safety and security of the homeowner and its occupants. The electrical, plumbing, and HVAC system must be in working order during the FHA appraisal. Okay? Mold, railings, outlets, function of electric appliances, peeling paint. So I'm just like letting you know, maybe peeling paint is more strict on FHA and VA than conventional. I'm just giving you an example. Okay? Broken window, it might be if there's a crack, conventional might not care as much, FHA might ask for replace it. I'm just giving you a little bit of food, some to think about when you are looking at the house. Sometimes I want to tell you guys, if you are inspecting a property, can you tell Carol that I'm in my Zoom meeting? Okay. So what I was saying here is I want you guys to, when you are looking at the property and you don't know if the appraiser is going to call some item, take a picture of the item that you are having issues or you might think it's going to be called, and let me know. Or let your lender. I don't know how your lenders are, but with me, if I tell you it's going to be called out because I have experience, I will. If I don't know, I have friends, lender, appraisers. I might send her the picture, say, what do you think of this? Is it going to be called out? So I can give you a little bit more answers if we need to, but you want to make sure that your client is very interested in the property, guys, and they want to make an offer. So, you don't want, I don't like to bother people unless I have to, but what I'm saying is that is like take a picture because you're not sure, right? Are you with me, guys?
Yes.
Okay. Let's compare conventional versus FHA. FICO as low as 620, in some cases less. FICO as low as 500, regular 580. So basically, FICO score for conventional 620, regular 680. So when a client has 620, even though the guidelines, you can get a conventional loan at 620, guys, but if DU does not approve it, that doesn't mean you are approved. But you can, based on the guidelines of conventional. FHA as low as 580, as low as 500 in the old days. Requires a 3% down, requires 3.5% down, has a typical DTI of 43%, this is 50%. With 20% down, you do not need mortgage insurance. All FHA loans have mortgage insurance regardless of the down payment. This is a good slide, guys, to keep and compare whenever you have time or whenever you forget. If you're a new realtor and you wanted to answer better questions for your clients or have your clients call your lender, tighter underwriting guidelines for conventional, more lenient underwriting guidelines for FHA, requires a conventional appraisal. FHA appraisal required per HUD guidelines. FHA appraisal required per FHA. Sometimes conventional loans, they will waive the appraisal. FHA don't. 4 to 6 years waiting time for bankruptcy. So 4 years for, I believe, Chapter 7, 6 years for Chapter 13 when it comes to conventional loans. 2 years waiting time after the discharge of bankruptcy for FHA loans. 7 years waiting time for foreclosure. 3 years waiting time for foreclosure. This is like, I might have a client, they have a lot of money in their accounts, they have enough assets, but they might have a bankruptcy in like 4 years. I can, in the 3 years. So I cannot take them conventional, but I can take them FHA, okay? So that's one of the reasons sometimes people go FHA versus conventional. Not because the buyer cannot qualify. Actually, we are put more clients in FHA and they fit better in their guidelines than conventional because conventional is extremely tight guidelines. So I'm just gonna give you guys a comparison really quick, okay? Do you see this, everyone? Do you see this slide?
Yes. Yes.
So what is the purchase price?
400.
And what is the principal and interest? FHA 3.5% compared to 3% conventional. So what do you see principal and interest?
FHA is less.
Is less. So, and I, by the way, looked at the same exact scenario and I did price both scenarios through my pricing engine to give me the exact pricing for this and for this for yesterday. And I plugged in the rates for each one of them. I plugged in everything the same here when it comes to taxes, hazard, and mortgage insurance. And as you can see, the total payment is $22.76 on FHA, $25.49, and if you put 5% conventional, it's $23.51. So basically, on conventional loans, even though the client is putting 5% down, and after the mortgage insurance here, even, you know, it's still higher payment than FHA.
Than FHA.
Okay. So they're putting more down. They are, you know, probably the interest rate higher on always conventional. So that's why. I'm just giving you an example and showing the client side-by-side comparison so they can assess their situation. And here, I have, in this one, cash to close from each client. And as you can see, $24,152, a little bit higher down out of pocket FHA versus conventional.
Upfront mortgage.
So because it's a little bit higher, FHA 3.5% down, this is 3% down. Okay, so as far as payment breakdown is this, as far as cash to close is this. Okay, guys?
Yeah. Yes.
And here's cash to close. Any questions before I go to
Hadia, I wanna ask how much is the down payment for FHA for jumbo loan?
the same.
FHA jumbo.
Jumbo loan, there's no jumbo loan for FHA.
There is no jumbo for FHA?
The highest loan amount, the one I showed you before on the slide, for FHA, the only way we can go jumbo is on conventional loans, non-conforming.
FHA is under 700, has to be under 700,000, correct?
FHA 756,000. I did put your guys the limit right here. It's right here. Hold on.
And Hadia, FHA only for first-time home buyer, or it can be for investment or second home?
No second home for FHA, no investment for FHA, and they cannot have another FHA loan. They can have another property, but not FHA financing.
Okay.
Or it's got to be, and it has to. Is there a 10-year rule that applies?
Then what?
Is there a 10-year rule that applies if you have, like, if you have an FHA loan within the past 10 years? Is there a rule that applies to that?
No.
No?
Nope.
Okay.
I have many of my clients selling the house and buying another one at the same time. Like I have plenty right now, they're selling and buying. So they have FHA loan on their present address and they're selling it. I can get them FHA, as long as we close the transaction here.
On that note, is there anything happening for first-time home buyers right now? I know that was kind of put on hold for a while.
Well, we are doing back the down payment assistance, which is the Kalhaka one, okay?
Right.
And
So
we have other ones. We have another one, but some of them, they can go up to 6% interest rate. Then when we are presenting the options to the buyer, it's like too much of a payment, but we do have still GSFAs. I have another program, I don't know what it's called. But what's going on right now, when people are coming for down payment assistance, you guys, the experienced listing agent, and I'm going to say there's experience between one person to another. If they know the minute they're getting, and they call me and they say, I want to make sure they're not going down payment assistance. Okay? So why is that? It could take a little bit longer time. Plus, the down payment assistance, they kind of like help them with down payment, which is they give them, and the closing cost. But there is points associated with that loan, up to 2% additional cost at the top of the closing cost.
Right.
So right now, when I'm telling the buyer you have to bring in this much money, so yes, case by case, but yes, we do have the down payment assistance. Okay.
It's not recommended.
But right now, it's literally cutthroat to get your offer accepted. So I don't know if you want to go with a buyer saying, "Oh, I have down payment." It depends, but if they're qualified, and we are doing 3 of them right now, but they're buying houses a little bit far away, which is they got their offer accepted, and we're moving very, very fast. But I just want to let you know, we are, all lenders, so busy. So some of the times I'm getting calls like, can you close the transaction in 30 days? We want to give you a client, right? So nowadays, we're still within 30 days closings for purchases only. I put all my refinances second because purchases takes priority for us, and that's what we do different than any other lenders right now, because we are closing still within 30 days on all our purchases. So right now, if you cannot have a lender by your side that closes within 30 days, they're not taking the offers as well. Even though some lenders, they're saying yes, they are taking longer. I don't know. I don't know what's going on right out there, but right now I'm qualifying everyone. I educate everyone on what's going on out there with the housing market.
Trainer.
Hey guys, whoever is talking in the background, mute yourself if you can. So this is the highest amount for FHA, guys, right here. Do you see my screen, 765, 600?
Mm-hmm.
There's nothing beyond it, okay?
So does this loan
uh,
limit
what
change regularly?
It said 1 million. It said 1
every
million
year,
for
Every
4-unit
year.
home.
Okay.
every year. Every
What was-
year the loan,
What was the 1 million for 4-unit house? You could buy a 4-unit house with FHA for 1 million. That's crazy.
But it has
for
to be
FHA,
owner occupied.
3.5% down.
Hadia, it has to be owner occupied.
Yes.
No
I
investment.
mentioned, I
Uh-huh.
mentioned to you, like
Mm.
all FHAs must be owner occupied.
Occupied. Mm-hmm.
On conventional loans, anything that we have owner occupied and non-owner occupied on conventional. So if we go and say this is an owner occupied property, they have to occupy the property, but they are a little bit strict. FHA could be more investigating the process, which is, you know, I heard sometimes they drop by and knock on the door and see who's living there.
Oh,
So some people, they want to buy, yeah. So I have not had that happen to any of my clients, but I had the clients actually get a letter in the mail after they closed escrow and ask them if they are the occupants and not somebody else to the property. And they called me and I said, yes, sign it and say, I'm the person owns. So I'm just letting you know, guys, that conventional more lenient on the occupancy than FHA.
Mm-hmm.
Okay, so I want to talk about, I want to stay within an hour, guys. This is AMC Vantage app. I just wanted to make sure, you guys, if you're a realtor, if you're a buyer, if whatever it is, if you download this app as a realtor, you can share it with any client to fill out a loan application, to upload all their documents to the app. You can manage your clients as a realtor. When you send it to your realtor from your own app, you can manage your realtor from your own, from AMC, which is, we are part of AMC. So this app will tell you every single time the client uploads documents, they change, or the scenario, something happens on their own application, you'll be notified as well as a realtor. If you're a buyer, it simplifies the process and it will give you everything on your phone. So if you want to upload something, it has built-in scanner, which is, it eliminated a lot of confusion and you know, what my clients wants to do if they don't have a scanner in their house, it has a built-in scanner. It makes your life easier, it makes our life easier, and all their documents securely uploaded to their file. It's ultimate security. So if you have people that they are like, don't want to email things and stuff like that. I just want to let you know, I'm going to be sending this link and I'm going to have it as well. Actually, if you send this, and I'm going to play the video.
Welcome to the Alameda Mortgage AMC Vantage app. Click the link that has been sent to you by your loan officer through email or text. The link will take you to the App Store. Download the Alameda Mortgage app. Enter your email address and click Connect. Enter your first and last name and click Next. Enter your mobile phone number and click Next. Create a unique password with 9 characters with 1 uppercase, 1 lowercase, and 1 number. Click on Save and put your password in a safe place. Now that you have signed up, read the terms and conditions and click Agree. Press Continue. Now you are in your home page. Here you will see your loan officer's information at the top. You can start your loan process and share the app with others that are also thinking of buying and refinancing. Below you will find other features such as your info, calculator, scanner, loans, and my loans. As you can see, when you click My Loans, it will bring you to your initial documents your loan officer needs, including 2 years of W-2s, last 30 days of pay stubs, bank statements, taxes, and driver's license. For example, if you want to upload your W-2, click on the year of your W-2, and you can take a clear photo through our scanner installed into our app. Approve and name your attachment and press Send securely. You are able to do this with all the documents that have been requested by you. If you would like, you can even start your loan application by clicking Start Loan Application. From there, you will enter your legal name, your current address, date of birth, and other information that will be needed. Enter your information and click Continue on each page until you have reached the end. Once you are ready to submit your loan application, click the box to agree. Click Review Loan App, and then you will be able to review the information you have entered. Your loan app has now been submitted and sent to your loan officer to review. They will get in touch with you shortly after. Other features include the mortgage calculator. You may choose a loan type, sales price, down payment, and more to get a loan estimate. The app also has a mortgage dictionary. You can click on the glossary to view the mortgage verbiage. Remember, your loan officer is always ready to help, so feel free to call or message with any questions you may have. Thank you for choosing Mortgage Express in affiliation with Alameda Mortgage.
So you're with me, guys?
Yes.
Yes.
So I did this video for you guys. It's on my YouTube channel. And so it's easy to use. It's like they can fill out the loan application wherever they're at. They can upload their documents from wherever they're at. So I just wanted to let you know, whoever likes to work with us, they have this tool to work with. I do believe in sharing the communication to be through you guys as a realtors. And if we have a buyer, they're very well informed of every single process throughout the transaction through the app right now. They love it. Like yesterday, a client of mine's like, did you send me an email? I'm like, nope, open your app. It says documents. It shows which documents you still didn't sign. You just click on them, you sign, click finish, done. So with moving forward to be able to help as many people as we can, this is a great tool. The next one, I just wanted to see if you guys have any questions first about anything.
Nope. I do. So FHA loans, no matter what the client's income is, as long as it's their first home and they're going to be occupying it, they'll be basically approved.
Yeah, FHA, it's very much, it's another myth of saying it's for first-time home buyers. I just want to clarify, first-time home buyers definition is you never owned a house for the last 3 years, okay?
Mm-hmm.
So basically, if you have a client that they want to buy a house and they want the down payment assistance, they have to be first-time home buyers. They cannot own a house for the last 3 years.
Mm-hmm.
When it comes into FHA loan, you could be an owner of a house at this time, conventional loan, and you can obtain another FHA loan at the same time. So you can own 2 properties when you are buying FHA. You cannot buy 2 FHA loans. You cannot have 2 FHA, but you can buy 1 conventional, 1 FHA, and if the guidelines allow you. So yes, for your question, they can obtain 3.5% down, but they don't have to be a first-time home buyer. They could own a house, or they could have owned a house last month and they sold it. It was FHA, and now they want to have another FHA. They're fine with that.
Okay.
Hadia, I don't think you answered her question. She said any income. She didn't say you know, anything about qualifying or what FHA was or, you know, any of that. She says any income, there is an income, you know, I mean, you have to qualify to be able to make the payments.
I mean, there
is that correct?
Well, yes, because I'm just wondering if it was for only low income. Like, I don't know if there's like a limit to that.
Income limitation. So for down payment assistance program, I know that for couple, it's $128,000 a combined household income. But for FHA or no, there's no income limitation. They have to qualify based on their income. They have to make enough income and debt to DTI, as I discussed, but no restrictions on income.
Okay.
Did that answer your question?
Yeah, that's a little bit more clear. Thank you.
Thank you, Steve.
Okay, I'll be waiting for my check as your
Steve.
assistant.
I love you, Steve.
Love you too, Hadia.
Yeah, I have a question, but it's not about FHA, but one of my clients asked me if we can do 5 units, conventional 5 units.
5 units are commercial loan, anything over 4 units.
Mm-hmm.
Under 4 units is residential loan. Anything after 4 units is a commercial loan. No, it's a different type of loan.
Mm-hmm. Okay.
I just want to introduce my team, guys. I love my team. I love everybody's in my team. It doesn't matter where we're at. I do have a great group of people work all over. Rosette and everybody else are here, and we're growing. If you know anyone, I'm hiring talent, guys. If you know anyone that need help, you know, or they're not happy where they're at, they need to make, you know, let them contact me. And we're growing very, very fast. We're adding more and more people as we go. Where else? Let me see here. Any questions you have before I end this meeting, please let me know. I'm here to help you all the time. The people that they are like always know how much I help. They call all the time, but we're always here ready and to assist in any situations we can. Let me know if you guys have a scenario that can help others by listening to the scenario. It helps all of us learn from somebody's experience. Does anybody has anything to share, any scenarios to share? Hello? Hello?
Thanks, Hadia.
Hi, Nico. Good to see you, Nico.
Good to see me.
Thanks, Clara, for attending. Thanks, Sarah, for attending.
You're
Linda.
welcome.
And Nishan, hi, my dear. How's everybody doing? Is everybody going to the office more and more right now?
Nah.
Yeah.
Listen, you gotta give me till the 1st of November. I've been going crazy with the refi and the purchase business going hand in hand, but we are like working around the clock here. And let me know if somebody needs to go over a situation as far as refinancing. I have some people call me, it's like, oh, you do refis too? I'm like, yes. We do refis, we do purchases, we do everything you can ask for. We are a full direct lending company where we have our own underwriters, funders, draw dockers, so everything done in-house. So you know your file is not brokered out. We are literally a full service lending service company. So if you guys have any situations, let me know, and we're here to help.
Will you email the slides, or where can we find the slides?
Yeah, we'll email this link. I don't know, Cynthia, are you online with me? So Cynthia will send an email link. I don't know if we can send it, but I know they are saving it to the cloud at KW, but I don't know if she can send it as a link.
I'll be sending it
that would be
a little bit later to anyone who has requested it.
Let me ask you, since you're with me, Cynthia, on the can you put it on my website?
I can put it on YouTube. It can go up there. That's what I typically do is I'll put it on your YouTube and then I'll be sending that link, or I can link it through Google Drive too.
So she'll send it to all my database, guys. If you have any questions, let me know. Okay.
Thank you, Hadia.
Thank you.
Thank you, guys.
Thank you.
Thank you. Miss you guys.
Bye-bye.
And let me know if you need any help. Talk to you soon.
Bye-bye.
Thanks.
Bye.
Bye-bye. Bye.